Point of View is sponsored by Castlegate Estate Company Limited, the nation's #1 service plot specialist.
Welcome to The Point of View. We're live on Citi TV. We're also on Facebook. The Point of View comes your way every Monday and Wednesday at 9 p.m. We bring you the right people. We ask them relevant questions and we learn a thing or two. It's an interactive program and our hashtag is Point of View. And of course, we are on Facebook at Citi TVGH. My name is Bernard Avle. Get in touch on the WhatsApp number on the screen. Tonight's show is more like a lecture because I have two of my favorite economics people to help us understand a fundamental problem with Ghana's currency. Stay tuned. So the Ghana Cedi has been reeling against its major trading partners, in particular the US dollar. The Cedi declined close to 13% since December last year against the US dollar and currently sells around 5.6 Ghana Cedis to the US dollar. The Bank of Ghana, in an attempt to hold the Cedi from depreciating, last week declared two interesting things. First, the new Ghana Interbank Forex Market Conduct Directives, and of course the pumping of $800 million US into the economy, hoping that it would stem this rapid slide. The Ghana Cedi has been a very popular topic on various websites. I'm just giving you a flavor on your screen on Citi News. So last week the AGI called for a halt of the depreciation to save industry. 3 days before that, former President Mahama asked Nana Addo to consider a Senchi-type forum to address the depreciation. The OMCs also warned oil marketing companies that fuel prices could further increase if Cedi depreciation continued. Still on that slide, Cedi depreciation, Finance Minister Ken Ofori-Atta, who will be hearing later on the show, said that we should be fine in a couple of weeks. He spoke to Citi News at a program last week. And there have been various articles. Indeed, the minority in Parliament is also saying that the $800 million injected to hold the Cedi's fall is unsustainable. And one of my guests tonight is also in our news. He published an article a couple of weeks ago. He says it's time for a national forum. That's Dr. Nii Moi Thompson. Now, the first time the president made a comment about the Cedi this probably past year and a half is February 28, where he said he was extremely upset and anxious about Cedi depreciation. So that's in the story in the middle of your screen. And of course, Ken Thompson, who's been on this show as well before, says we should focus on a Greek to rearrest the Cedi because it broke jail. So those are some of the stories. The good news we are told is that today the Cedi has started recording some marginal appreciation against its major trade partners. Checks on the market, according to a couple of websites, show that on March 14, the local currency did appreciate against the dollar by 5% to trade at 5.60 Cedis, compared to about 5.90 last Tuesday and Wednesday. So tonight, who am I speaking to? I'm speaking to Dr. Nii Moi Thompson, who is the former DG of the National Development Planning Commission. He's an economist, and he was also a consultant for the UNDP. He's been doing a lot of economic thinking in the past few months. Doc, great to have you on the show again. Good evening.
Thank you for having me back.
I also have my good friend, Dr. John Kwakye, who's a private economic consultant, also done a lot of work, IEA in the past, IFS in the past as well, and MPC as well. So, Doc, it's good to have you. Good evening.
Yeah.
You have a lot of fans.
I do.
They like your haircut. They love it. Maybe you tell us about the haircut.
Yeah.
So tonight I have a few questions. I'm going to make it exciting. So question one.
Yes.
Why is the Cedi falling? And question one is in two parts.
Yeah.
Give us the historical factors and give us the structural factors. So maybe let me start with Dr. Nii Moi Thompson. Why is the Cedi falling?
Well, as I said, thank you for having me here again. As I said initially in the slides that I sent you, the Cedi is an inherently weak currency, and I compare that to three other currencies: the Naira, the shilling of Kenya and the South African rand. If you put that up, you
so
see
that's
that.
inherent. We'll
Yeah,
put up
inherently. So it's built in there, and it's therefore structural.
So there you have it.
Yeah, so you see that
What
there,
is
for
that?
example,
Kenya is yellow, is high.
Kenya is high, and when you dig further into Kenya's economy, you see the reason why it is high. It's relatively stable. You walk into a typical Kenyan supermarket, about 50-60% of the goods are locally produced. If you walk into a Ghanaian market, you'll be lucky if you get 1% of the local. So the city has consistent. This is starting from 2000.
Wow.
It's nothing new. Nigerian, that's the orange one. And then you have South Africa, which they all outperformed the city since 2000. You can even go further back to 1990. And it's inherently weak for a number of reasons. Some of them are structural. Some are institutional, some are cyclical, some are seasonal, and so forth. The structural ones we all know. We are not exporting enough. People complain about, well, too much imports of this and that. But really the problem is that we are not exporting as much as we should. If you're importing something, then clearly you need it. But where are your exports? We are supposed to have an Ghana Export Promotion Authority. It's known more for its scandals than for actually exporting anything. Under their watch, I think non-traditional exports have been stuck between 2 billion and 2.5 over the years. They're just stuck there. And as I said, one scandal after the other. We have an Exim Bank that's supposed to be promoting, at least supporting exporters. I just saw in the papers the other day that they were doing youth in vegetable farming, which is a complete departure from their mandate as one would expect. So there's that aspect of it, the structural part, where we are simply not exporting as much as we should. That then leads to the other problem of this excessive dependence on cocoa, which is a one-off source of...
excessive dependence on cocoa.
On cocoa.
It's also part of the reason why the currency...
It's a major one, because the cocoa proceeds through the annual syndicated loans. Again, it's one of the graphs that I gave you.
Yes.
Comes in just one-off. The rest of the year, we really don't have any steady source of foreign exchange coming in. Again, because of... So you have these spikes that come in with the cocoa loans, and thereafter we're basically left
So seasonal
hanging.
factors in CD's woes.
So you see that. This is a typical one,
what are
for
you showing?
example. So what you're seeing there, in 2011, 2012, when Ghana's population was 25.2 million, we borrowed 2 billion. Since then, we've actually borrowed much less. One would think, now at 2018, Ghana's population is almost 30.
Yes.
And we borrowed 1.3 billion. That's the blue line. Once you even adjust for inflation, it's even lower in terms of its purchasing power. Ideally, from 2 billion, it should be going up. The blue line should be going up, maybe to 5 billion or 6 billion. But because we are stuck, and cocoa isn't really something that grows, it's not like manufacturers. You can grow the numbers exponentially.
So how does a cocoa syndicated loan affect the city?
It only helps it's a one-off thing. It's a shot in the arm.
So when it comes, the city does well.
Exactly.
When the money finishes, the city goes back.
Thereafter, we have virtually nothing to support it because we are not exporting anything consistently.
Wow.
The other numbers that look good on paper, oil, gold, and so forth, we hardly get any of that money. So...
What do you mean? The money doesn't stay here?
No, I mean, when I did the analysis for revenue, for example,
wow.
The corporate taxes from oil sector, 0.7% of tax revenue. The same thing with gold. So they don't play the same role as cocoa does. And cocoa, because it's one of when we don't have a steady source of foreign exchange coming in, and that's one reason why the cedi then is inherently weak. Because it's one shot. And it's actually against one of the key principles of economic management, that you shouldn't depend on one-off sources of revenue for recurring expenditures. And that's why I'm worried that they're now going to go and get Eurobond and so forth and so on. That is another one source. It will come in and help to stabilize the cedi. And once that runs its course, we are back to square one. So the issue of dealing, which one is this? Capital expenditures. Okay, that relates to the other thing. If you could show the other graph, then this one would make sense.
Which other one?
There's one that shows government spending and then shortfalls in revenue.
Okay.
That's another thing. And this is where the government actually has control in restraining the fall of the cedi. Because if you show that, you see that consistently, government's wage bill
That's the structure issue.
Yes. Yeah. Government's wage bill, once they bring it on, that I will be all right.
Yeah.
So they are consistently... Exactly. This is a perfect picture. And it says 2008, but it actually goes further to 2000.
So what's the relationship between the red and the green?
The red ones, the red ones are deviations from revenue.
Okay.
So the government projects that it will raise 2.3 billion. It ends up raising 2 billion. So that you see that they're all negative. It means that the revenues fell short of budget targets. However, the green ones are overshooting of the wage bill.
Oh.
So your revenues are consistently falling, but your wage bill is consistently overshooting its targets.
Mm.
It is built into the system.
And what has that got to do with the currency?
Exactly. Now, the government is a major spender. You are constantly putting money into people's hands. First of all, there's low productivity in the public sector, so a lot of the money isn't even justified. Secondly, the things that they're going to spend this money on are not even locally produced. Almost all of them are imports. So you are actually putting pressure on your currency by constantly feeding, not just feeding, but also exceeding your targets. And in the process, you are not even growing the economy. You are then actually strangling economic growth in the process. And it also has a tendency to even undermine monetary policy. When they are doing inflation targeting and so forth and so on, you need to complement that with fiscal discipline.
Okay.
And when you have the green lines as you have, it actually is a threat to monetary policy. And therefore, this monetary policy's effect on stabilizing the city is also affected. You see some of it, and this is actually more cyclical than seasonal. Cyclical in the sense that it is sometimes affected by the electoral cycle.
So it means that we are actually having revenue shortfalls and it's growing larger in the past few years.
It grew larger, especially in 2016, because of the economic. In 2014, 2015, we had a recession. Everybody knows that. And then they have something they call trough. That means the bottom of the recession. And so that was in 2016. And then it started picking up. But you see that in 2008, again, this is affected by elections. In 2008, there was a spike in the green one, 427.
We paid people more money because of elections.
Exactly. And then
2012, we did the same thing.
Yeah, but then after the election, after every election, we then begin to retrench. So 2009, 2010,
the green goes down.
The green goes down. 2011, it picks up again.
And 2012, it goes up.
It shoots up.
And it comes down in 2013.
And then it comes down. Now, after 2016, we were supposed to retrench, but we kept going.
Oh.
And that's one source of the pressure on the city.
Brilliant. Let's pause here. And I'm going to ask Dr. Kwakye another question. So I was checking Bloomberg up since their record started, right? And they've been taking records since 1994. And the line just keeps going up. It means the currency has been falling since the record started.
Yeah.
I'm told that Buzia was overthrown because of devaluation,
yes,
which of course is when it's in a fixed exchange rate regime. So I'm going to show that graph, and you tell me historically why our currency has never appreciated, why it's been depreciating since they say 19 Kojoho.
Okay.
Why is that? So Anas, please put up my Bloomberg graph, and I'll ask Doc to comment. So this is Bloomberg. I just did this a few minutes ago. And their records start in 94. And for Bloomberg graphs, the higher it goes, the worse for the currency, which means the amount of cedis you need per dollar, right?
Yeah.
And they give their figures there, 5.4 being the average and all of those things. But this is since 94.
Yeah.
This is 2 years after Rawlings was elected. But look at it, from 2014-ish, it begins to spike quite seriously. It's been quite, look, between 2000 and 2009, it's been gradually declining. Hit a bit of a spike after the redenomination, and then went suddenly up after 2014. So when Mahama was in government in 2014, it was really bad. And it looks like we are facing a similar thing because the graph sort of goes quite up at the last end. Why is this like this, Dr. Kwakye?
Well, of course, Doc has taken us through the historical, the structural issues and so on. So I just want to amplify some of the points that he has made. In fact, the Cedi was first adopted in 1965. So I'll even go beyond this. 65, when the Cedi was adopted to replace the Ghana pound.
Okay.
And at that time, the exchange rate was such that the cedi that was adopted was higher than the dollar.
Is it?
Even in 1965.
I see.
Then, since then, of course, there's been depreciations, we have fixed exchange rates, and devaluations, as you said.
So this is the year before Nkrumah's overthrow? Because
Yes.
this is 65.
Yes, we adopted the cedi before. He adopted the cedi. He
And
changed
they
the
overthrew him
currency.
the next year.
Yeah. Okay, so, and then all the way we come to 1983.
Okay.
Because we had a fixed exchange rate system just prior to that. Before 1983, I mean, the fixed exchange rate was just 2.75 cedis to the dollar.
Okay.
And, in 1983. Then since then, we adopted, we started a system of a flexible exchange rate system, regime, with subsequent devaluations and depreciations until we got to 2007, when we said we redenominated the cedi.
Okay.
And when we redenominated the cedi, we introduced the new Ghana Cedi, which we defined to be even higher than the US dollar. I mean, in 2007. Because we knocked off 4 zeros, we knocked 4 zeros off the previous currency. So we defined a higher currency that was higher than the
But
dollar.
they claim the value is the same.
Yeah.
No, yeah, but we introduced a new currency. In fact, the exchange rate was something like $1.92 cedis.
But that's 900 old cedis. So if you look at the series,
Yeah.
it's still falling.
The benefit was more
that's-
psychological.
Yeah, it's just we
So we
introduced
said it
a-
was now 1 CD.
yeah, which was higher.
So it was,
I just want to
so 9 pesos
place it
to a dollar. I
in
get it.
perspective.
Yes.
Because we have moved from there, even if it was 1-on-1,
Yes.
we have moved from 1-on-1 to 1 to
5.
5.6.
Yeah.
So that tells you that, as he said, the cedi inherently is a weak currency. And it will continue to depreciate because it's driven by the fundamentals of the economy. Okay? And by fundamentals, he mentioned structural ones, which have to do with our production of exports. The fact that we depend almost exclusively on primary exports, whose value is low in international markets. And then we also depend heavily on imports also, So those are the structural issues.
So you're also saying that the fundamentals are weak, the currency will...
Yes, certainly.
Which means, well, yes,
no,
correct.
but the fundamentals. But who says he's not?
No, but because I'm asking, hold on. They're saying that if the fundamentals have improved.
Yes.
But the currency is still weak.
But let me go on, because when we talk about fundamentals, it's not just the macroeconomic fundamentals.
Okay.
We have the macroeconomic fundamentals, which has to do with, growth, inflation, the deficit, debt, your reserves, external balance, and so on. Those are the macroeconomic fundamentals. They have certainly improved in the last 2 years.
Okay.
All those indicators have...
Inflation has come down.
Inflation
growth has gone up.
Growth has gone up. Reserves have improved. The deficit has come down. The external balance has improved. The debt has improved. So the macroeconomic fundamentals have improved.
But there are other fundamentals.
But there are structural fundamentals which have not changed.
So now we have structural fundamentals.
Exactly.
So what are the structural fundamentals?
And I'm talking about the production, the fact that our exports, we produce almost exclusively primary products.
Okay.
We don't add enough value. And then when you go to the demand side also, imports, we depend entirely, all our imports are, our goods of, imports of intermediate goods, capital goods and consumption goods. We import virtually everything. So those are the structural issues. And then from time to time, okay, the cedi will also be affected by shocks, which are, short-term, shocks. Okay, apart from these underlying fundamentals driving the currency, from time to, and that's why we see sometimes episodes of sharp depreciations. For instance, what is happening now? Okay, I can tell you that the macroeconomic fundamentals have improved. There's no doubt about that. The structural fundamentals, not that much. But why is the currency depreciating so rapidly, now? And it's due to what I can describe as short-term, factors, shocks.
Short-term shocks?
Yes.
Like what?
First, there's a seasonality effect to it. First quarter is always a lean period for inflows of, foreign exchange into this country. The cocoa receipts come in during the last quarter. And I believe that there's also some outflow because maybe the foreign companies, maybe they declare their profits, they do their accounts at the end of the year, and then maybe they start repatriating some of the profits and dividends and so on. So it is a fact that if you look at, the Cedi, the first quarter, there's always, some kind of depreciation. It happens. So that's the seasonality. Now, I also understand that there's some negative sentiment out there.
Okay.
And it has to do with the fact that we are ending IMF, program, and there's some kind of uncertainty as to whether we'll be able to maintain the kind of fiscal discipline.
Despite all the promises, despite the fiscal council.
Exactly. But that is what surprises me, because this is a government that has put in place, taken steps, passed the fiscal responsibility law.
Which you advocated?
Yes, formed the fiscal policy advisory council and all that.
Put in charge Paul Akwa,
okay.
Who's a very prominent and respected economist.
You would have thought that investors will even see the positive side of this. Of course, we cannot have the IMF, schooling us forever.
So you're saying that
we should have graduated.
Having gotten to a point where we are through an IMF program,
yes,
investors are rather punishing us for finishing the IMF program.
Exactly, and that there's going to be uncertainty. They are not sure whether we can maintain discipline on our own and all that.
Because the policy credibility is gone.
Exactly. So, that's negative sentiment must have reflected in some kind of some disinvestments, from, the money market and so on. That must certainly be taking place. Although I hear that it is not even that too substantial.
Very interesting.
Yes. So what is going on now is that there's these shops, temporary shops.
Did the Bank of Ghana's decision to reduce the prime rate also affect the Cedi?
Well, I must say that, look, I'm a member of the Monetary Policy Committee. We took that decision based on our assessment of the economy, the balance of risk between growth and inflation. That's always the basis of our decision. And at that time, our assessment of the balance of risk was that there was a greater threat to growth than inflation. Okay? We always look at the exchange rate also. It's like we are looking at multiple targets. It's not just inflation. We look at growth. We look at
so you cut the prime rate to stimulate growth.
Yes, primarily
hoping that inflation would not rise. So you are balancing the two.
We felt more comfortable with what was going on with inflation.
So the economy needed to be sped up.
Yes,
instead of slowed down.
That was our assessment.
So in speeding up the economy, you cut down the interest rate.
We did. That was our assessment. But in any case, the Cedi denominated assets, they are mainly held in treasury bills, and treasury bill rates have gone up, for some time now, they've gone up. So I'm saying that the return, the return on Cedi denominated assets has not declined that much, even though we cut the rate. Okay? We cut the policy rate, but what I'm saying is that the treasury bill rates have not fallen that much, And then we also looked at, we compared Ghana with our peers, and we saw that even though we cut the nominal policy rate, in real terms, because in the real term is 16 nominal, and inflation is just at about 9%. So the difference is the real rate. And we saw that compared to our peers, we had the highest real policy rate. You see? So even though we cut the nominal rate, we have not eased policy to a large extent, because the real rate, policy rate, is still high.
Interesting.
Yes.
We'll take a break. We've been told the historical and structural factors affecting the Cedi. We have other questions. So, is the Cedi falling necessarily a bad thing? That's the next question. Also, what has government tried to do? You hear from the head of financial institutions at the Ministry of Finance and also the finance minister giving their various theories on what can be done to strengthen the Cedi. And then we'll also look at the long-term issues. This is the point of view. Don't go away.
Living among your peers in a serene gated community with tarred roads, drains, electricity, piped water supply and 24-hour security can be so relieving. That is the experience you will enjoy when you reserve the Castle Residency plots located near Prampram Beach and Katamanso near Adenta Barrier. Just pay up to 60% deposit and start construction to start enjoying Prampram Beach and Airport City life. You can start with any deposit. We give you a whopping 10% discount if you make an outright payment. The Castle Residency plots are managed by Castlegate Estate Ghana Limited. Locate our offices at Katamanso Estate site off the Adenta Barrier Dodua Road or Prampram Beach Road next to Oasis International School, or contact us on 0545 559928, our website on www.castlegateestate.com.gh, or email us at info@castlegateestate.com.gh. The Castle Residency Plots. We make home ownership easier.
The moment you've been waiting for is here. On Saturday, 23rd March 2019, as part of 97.3 CTFM's Heritage Month, comes the music of Ghanaian origin concert, Mogo 2019. Time to experience the cocktail of the old and new, the legends and the crooners on one stage. Mogo 2019, featuring Amanziba, KK Kabobo, Adani Best, Kwabna, Akwabwa, Kofi B, Sina Soul, and a Kwampa Band for one night and one night only. The music of Ghanaian origin, Mogo 2019. Serving you an overdose of nostalgia and happy feet. Venue, National Theatre. Date, Saturday, 23rd March 2019. Rate is 120 Ghana Cedis. Tickets available at the front desk of City FM and City TV. Gates open at 7 p.m. Call 0205-973-973 or 0302-224959 for ticket reservation. The music of Ghanaian origin concert, Mogo 2019, is sponsored by Freight Consult, your total logistics manager. Go is powered by 97.3 City FM and supported by City TV.
Welcome back to The Point of View. We're trying to understand the Cedi's travails against major trading partners and assessing government solutions. So there's a team from government on the Eurobond Roadshow. They are presently in London. A few minutes ago, I called up the head of the Financial Services Division of the Ministry of Finance, is Samson Akligo, to ask him what, in the view of government, was the cause of the currency depreciation and what they were trying to do about it. This was a phone interview, so you would see his picture, but you just hear his voice in this short clip.
The recent developments actually reflect what I would say is more like the speed of adjustment that happens to currencies in economies like ours when they are open to portfolio investors in particular. So you would realize that in the first quarter, you have a confluence of events that really have resulted in it, despite the fact that the foundations of the macroeconomy has improved significantly. And it has the key lesson for us is to understand the dynamics of the economy and beyond the stability that we have in the economy. And I think that clearly the signs that you have seen in recent times shows that, most importantly, the currency will recover. And then I think that we are also lucky enough, especially from the Finance Ministry, to be working with Bank of Ghana at this time on a roadshow where we are engaging the very investors who really are supporting us in terms of our financing. So that is really our view.
So what is your solution? I mean, we were told you pumped some $800 million into the economy. That seems to be the regular solution previous governments have adopted. When the currency weakens, you pump some US dollars in. There's a temporary stabilization, but the trajectory of depreciation continues when the money runs out. What is your solution, and how can you convince us that this is a long-term solution?
Yeah, Bernard, quite frankly, the responsibility, especially of the day-to-day management of the currency, rests with the central bank. And really the solution that that is being given most often than not is the appropriate response to especially this short-term volatility. I think that, as I explained to you, predominantly aside the seasonal pressures that you see in the first quarter, you also see that the speed of adjustment in the capital account also contributed to the situation that we observed. So I think going forward, the role of the ministry, most importantly, would be among others, the following. One, it is important for us to speed up our work on transforming the economy. It is important, and I think that we have to do that bearing in mind how do we get a real sector response that limits some of the things that we talk about every day in terms of the excessive dependence on imports. We have to also get a transformation process that ensures that we have some significant local ownership. I think it's important. The other thing that is also important, really from the ministry point of view, in addition to that, is that we also have to strengthen the structures for of the FS market to reflect, the current or modern dynamics. We need to ask ourselves questions about, what do you do when you have portfolio investors, foreign portfolio investors exposed to you, especially in the Eurobond and both also at the domestic level, and what FX market structures do we need to support that? We also need to engage, most importantly, the big corporates, and we also have to deepen our capital market, which is very, very important. And I think that some work is being done in that regard, and really, as a country, we have done quite a successful work on the pension funds. If you have a strong pension fund, what it means is that significantly a large amount of your financing gap in the budget and even in the private sector can be funded domestically. Secondly, we need to strengthen our mutual funds and make sure that the capital market is stronger. We also need to look at insurance and get insurance portfolios to be more robust. I think that essentially that means that we must ensure that we deepen the domestic capital market to support our financing needs. I think broadly these are some of the policies that we need to implement, and really most of them we are doing, except that some of them will take time.
So that was Samson Akligo speaking more about the long-term things that need to change for the currency to strengthen. The finance minister, however, has been more clear. He's essentially said in 2 weeks' time, the slide in the currency would stop. And he spoke to City News after a meeting last week. This was before they went for the roadshow. So this is Ken Oforiatta.
This is an initiative to have an annual breakfast meeting so that in a sort of a family environment discuss what some of their issues are. And as we also conclude the IMF program, really focus on the potential contribution that they can make to the Treasury. And so looking at efficiencies and issues of governance and what should be done to make sure that we get the best from the SOEs. Because if we look at the almost 130 million that we received in 2018, the SOEs contributed about 6% of that. And that's certainly not good enough. They should be doing much more than that. So we are looking to maybe institutionalize a certain percentage of gross profits and that will ensure that the state gets its portion of that.
I know in the past you've complained about dividend payment and all those things, and have you gotten the commitment from them that some of them are doing quite well, but they still find a way to hold on to the funds? Is anything going to change going forward?
It is, I mean, especially with the passage of SIGA, which you saw through Parliament. I think we're going to put a lot more structure into place to encourage that to occur.
I also heard that you touched on the Cedi Inside about some of the progress you've made so far in stabilizing the city. Can you please recheck that?
No, I think we're at a good place, and as I mentioned 2 days ago, that we are looking for not only stability but a reversal. As you know, we went through Parliament with the bridge financing. That has been concluded. So the central bank, has that money. Cocoa Board also concluded its 300 million facility. So that's nearly $1 billion that's coming. The Eurobond roadshow is going well. We'll be in London for the final meetings on Monday, and we expect to have a very successful flotation of paper. So I think, with that and the fundamentals being as good as they are, we expect a reversal and stability. I think maybe the confluence of things in the first quarter, i.e., the first quarter is usually where the pressures are for dividend and coupon externalization, trade flows, etc., compounded by strengthening of the dollar, and I think for us specifically is the issue of concluding of the IMF program maybe has led to.
So that was Ken Oforiatta speaking to George Riafe of Joy and Anita Arthur of Citi. I had bridge financing, I had Cocoa Board, I had Eurobond, and he also said the fundamentals are strong. Again, Dr. Nii Moi, what do you make of that? So he's saying in the short term, in a couple of weeks, things will normalize because of some bridge financing thing, Cocoa Board money coming in, and Eurobond that they are on a roadshow as we speak, and which was a roadshow that they were on when I spoke to. What do you make of that?
That's exactly what I talked about earlier. We are now fighting fires. One of sources of revenue. At best, they will provide temporary relief. These monies will come in. The same multinationals will repatriate them in the form of profits, and we'll be left wanting one more time. So, as I said, it's just a temporary thing. For me, I look at the problem more, and I emphasize that part of it, the government spending part. And that's why we had the Fiscal Responsibility Council and so forth and so on, and the investors are skeptical because they also are looking at the patterns of government spending, what government is doing today, and its implications for the fiscals in the future. And they're having doubts that without the IMF standing over us with a big stick, are we really going to do as well? Look, in the past 2 years alone, we've created 44 new districts and 6 new regions with a referendum. These are all non-productive expenditures. We should have been focusing, and I remember seeing an interview that you had with the finance minister where you kept pushing him on that line, that should we not be investing in productive ventures, infrastructure to stimulate growth, and therefore you get the revenue to support these things. But rather we reversed it, where we are spending in a pattern that did not reflect a commitment to promoting growth. And so now we are facing the consequences. One of the stuff I showed you actually had to do with that. So for me, the role of government spending, excessive and reckless government spending, is perhaps more important than all of the other factors. I listened to Sampson. What he referred to is more like the technical factor. Earlier we talked about seasonality, structural factors, cyclical and institutional. What he brought up was the technical. So such that even if we didn't have that, there still would have been depreciation, but not as pronounced as this one. And then if that happened, then what would have been the cause? And it goes back to, so let me just share something with you, just to show the persistence of this problem, dating back to 1952, when the the colonial office actually assessed the Gold Coast economy. Let me just read it to you. It says, quote, if we were forced to sum up the Gold Coast economy in one word, the word we would choose would be fragile. 1952. And then it says the Gold Coast economy has no checks on the inflationary wave of spending. A sudden rise in income can rapidly outrun the supply of goods, causing people to bid goods in short supply, forcing up prices, leading to demands for higher wages and salaries, which will in turn push prices up further. Violent inflation can develop under these. And it goes, it's as if it's discussing exactly what happens today. Because you're pushing these people, you're putting so many people on the government payroll who really shouldn't be there. Unqualified, we saw what happened at the Yawasu Wogan thing where someone selling phones then ends up on government. And it's happening so much like that, when it's supposed to be the opposite. Part of the 40-year plan was actually the promotion of what we call meritocracy. And we looked at what happened in Asia, like Japan, South Korea. Meritocracy was a key driver.
But as a bigger state necessarily, is it necessarily bad? Because all the countries we admire in Asia, they have a strong state sector.
No, we are talking about, that's precisely the point. The strong state sector came from meritocracy. So in their case, for instance, there was no way someone selling phones, and there's nothing wrong with selling phones, by the way, dignity of labor. But the transition and the implications for public sector productivity, look at what happened. He required at least twice as much time to testify because someone had to translate that. That's negative productivity. In the case of these Asian countries, and the lessons there are critical, they chose for the public sector. First of all, you couldn't just get on the government payroll. You had to take a civil service test. And they had the best students from the best universities. This is not what is happening with our public sector. We've filled it with people who shouldn't be there at all. So for me, yes, we look at all the other factors. The man from finance has explained the technical factors and so forth. The structural factor for me is government. And if the government really wants to restrain this runaway depreciation thing, the first line of action would be to cut government spending, freeze hiring across board. This is what is done in other parts of the world, Bernard. During the last financial crisis, there were cities in the U.S. that actually sold their city halls to private businesses because they could no longer afford to do that. And then they rented from them. So whenever you run into a crisis, you are supposed to reprioritize your spending. But here we are spending as if we have a bottomless pit.
Dr. Kwakye, you heard the two gentlemen.
Yeah.
Any comments on what you heard so far?
Yes.
Bridge finance, Cocoa Board, Eurobond, and all those things.
Yeah.
Will it work?
You see, now currently we have a storm taking place. So we need to try and calm the storm.
Okay.
Okay. So that's why I can understand the short-term interventions that they are talking about.
Okay.
In other words, try and find some more foreign exchange and inject into the system. We do that when we experience shocks from time to time, you know. Because the Bank of Ghana, once you have a flexible exchange rate, the IMF calls it a managed, float.
Or dirty float.
Well, managed float. No, that means that it's flexible, but the central bank intervenes from time to time to counter, movements in the exchange rate that are due to, temporary shocks and not due to, the fundamentals. Because you can't resist the effect of fundamentals. But when you experience shocks, you can come in and try and calm the storm. You see, there's this negative sentiment driving the exchange rate. Okay? So you need to be able to calm it a little bit.
Where is the negative sentiment coming from?
I mentioned it.
If we're saying that the macro fundamentals are strong, why are you still generating negative sentiment?
I thought I said the investors are thinking about when the IMF is gone, whether we'll be able to.
But if your macro fundamentals have been properly managed, the IMF leaving notwithstanding, they will have confidence.
Yeah, so the investors, I'm saying that they are getting it wrong. I mean, I don't see why they are thinking that way. Do you get me?
But investors are. What do you mean? They are rational investors.
Yes, they are.
So they are acting in their best
self-interest.
Yeah,
but what I'm saying is that we cannot have the IMF, with us forever. We should be able to graduate from IMF program.
So maybe then investors feel your macro fundamental improvements may be artificial.
Oh, how do
or they believe that the exchange rate is the best measure of your fundamentals overall.
No, but they are the ones who are driving it. I mean, is their sentiment and there's so because of the speculation, you see, they are speculating against the currency. Okay. Well, I've also heard that the banks. Their demand, they present their demand for foreign exchange from Bank of Ghana and I mean from their customers. And I've heard that they've seen incidents of multiple, demand. In other words, one customer will go and place, his demand with this bank, and then go and repeat it in another bank. And that drives, like there's pressure. It gives a sense of,
has the government sown the seeds for a structural transformation enough? When you see its policies,
yes.
One district, one factory,
yes.
One village, one dam, one district, one warehouse, etc., etc.
Yeah.
Are those enough for a structural transformation? Because you said there are macro fundamentals and structural fundamentals. Yeah. Do you see the seeds of structural transformation taking place?
You are now taking me to the long-term solution.
Yes.
Yes, certainly. So we've moved from the short term.
I'm saying that
the short term, they must intervene, to calm the storm. Because you can't allow...
So you understand why they are doing what they are doing?
Exactly. You can't allow
I
this
agree that
to
I want you to move to the next level.
But over the long term, we have said that the CD inherently, we can stop it, but that's what intermittently, we can stabilize a little bit. Okay?
So in the long term, we can never stop it from
The
falling.
fundamentals will always kick in.
So should we then forget about trying to stop the fall of the CD and say, now that our CD is weak, don't forget the US accuses China of having an artificially devalued currency because it helps them. Yeah. So instead of focusing on, let's stop the CD slide, let the CD go where it will go, and let's focus on exports.
Yeah, exactly.
Should that be what we should do?
No, I'm saying that what we are experiencing now is due to short-term, temporary shocks. So you must counter them.
But I've shown you a graph that since the CD has been falling.
But that's the underlying...
So my point is that shouldn't we accept that the CD will always fall? Unless let's say our weaker currency can give us an export advantage.
Yeah, in a way, you are right. Now, unless we address the fundamentals, the CD will continue to fall.
Hold that thought. Why do you say no? What's wrong with saying that your currency is weak and the benefit of that is having a strong export market to take advantage of a weaker currency? Therefore, your exports are cheaper. And then it will make your imports more expensive. People will stop wearing suits and they'll start wearing this.
If that were the case, we will be a booming export economy today, having moved from 2.75 in 1983, as you said earlier, to what would have been about 56,000 cedis to the dollar. Depreciation by itself does not stimulate exports. It depends on a number of factors. One, what are you exporting? If you're exporting manufacturers, which is a price maker as they call, versus exporting primary commodities, depreciation does not necessarily help you. That's one. Two, there's a critical assumption to that depreciation theory that you must have zero or low inflation. If you have high inflation, it will quickly wipe out the benefits of depreciation. And in our case, it's become a cycle. Because we are highly import dependent, and plus certain practices. For instance, we have an unusually high share of international trade-related taxes. It's about 17% compared to an average of 10% for lower middle-income countries. For the long-term plan, we even advocated a much lower share of international-related trade-related taxes to around 2% or so. That calls for a very well-articulated strategy to gradually wean yourself off trade taxes and focus more on income and consumption. So the issue of depreciation automatically supporting exports.
No, I'm not saying it automatically. I'm saying that if your currency has been depreciating since records started,
exactly,
should you not develop an export strategy that takes advantage of a weaker currency?
Yes, but that export strategy will have to take advantage of certain institutional reforms that will bring inflation down for sure, to the whole financing of the private sector. We just had some partial reform of the financial sector, the consolidation, dealing with governance issues in some of the banking sectors. But there are other aspects of it that I think that the central bank should have dealt with that it didn't deal with. For example, predatory lending by banks in Ghana is a major disincentive to private sector development. I just looked at the loan repayment schedule for a friend of mine, and I decided to recalculate that. They use what they call the flat rate, and I use the decline. The flat rate basically means that you pay interest on the loan irrespective of how much principal is left. So you pay interest on, let's say, 100,000 that you borrow, and even when the principal is down to 10,000, you are still paying, which is predatory. In some countries, they've actually passed laws to outlaw that. So what happened was that I recalculated using the correct figure that should be the practice for small. And it turned out that he was paying 3,700 Ghana Cedis more than he should have, which translated to about 222,000 Ghana Cedis. This is what we are doing to small businesses, and that's why they cannot expand. So in this case, 222,000 cedis that someone could use to expand their business is going to the bank because the central bank hasn't done the right thing of making sure that, listen, stop using the...
We'll take another break. When we come back, we'll just wrap up with long-term solutions to this currency fall. And read some of your comments. This is a point of view on CCTV. Stay with us.
The policy makers, the top personalities, the people at the center of the news. They speak on Face to Face. One-of-a-kind access into the lives and the stories of our time.
So these are some of the things. If you want time, as I was boarding the plane,
it just came to you.
Just straight from the launch to the queue, a song drop. So
Face to Face with Godfred Akotobuafo every Tuesday at 9 p.m. For regular news checks as they unfold, 2020 news all day, all the time. Politics, sports, entertainment, business, and more. 2020 news. We bring you the world in 20 minutes.
Welcome back to the point of view. Let me read a few of your comments. Paul Kofinya, Mr. Bernard, it hurts me that we have wonderful personalities in this country whose ideas are not accepted. But how well can we also educate the Ghanaian to understand the cedi depreciation? Adil Mohammed says, was Dr. Nii Moi Thompson not part of JDM's government? What was his advice to the then government? Benny Campbell, Bernard, I don't believe the crisis in the banking sector I believe rather that the crisis in the banking sector might also be a contributing factor. Can your guest speak to this issue? Kobe Fred says, Bernard, your panelists are putting out high level of economic education in simple language. You need to invite them more often. Okay, so you heard that. You need to come here more often. Ebenezer Epila, interesting discussion. Bernard, I like the history of the cedi given, but how can the cedi be an inherently weak currency when at the time of adoption it was ahead of the dollar? This is Ebenezer Epila. All right, gentlemen, quick issue. Banking crisis, worsening situation? What do you...
Well, I don't...
You're on the MPC.
No, but it's not an area that...
Are you guys not part of this problem as
Which
MPC?
One? I mean the...
Emergency Policy Committee.
The cedi...
Yeah, because you determine the interest rates.
Oh, we do.
Does that not affect the currency?
No, we have to take some responsibility for that. And I'm saying that it is one of the objectives. You have multiple targets, actually. I mean, the main target is inflation. But growth and the exchange rate, it shouldn't be so. But in a developing country context, you have to have your eye also on the exchange rate. You can't, because if the exchange rate, the way it is going, it feeds back into inflation and causes more problems for us. Okay. Now, I think you were coming back to the long-term, solutions. Ben, I just wanted to say that in simple terms, you see, your currency is as good as your economy. Okay? Your currency is as strong or as good as your economy.
The stronger your economy, the better your currency.
Yeah, it's as simple as that. So all these fundamentals that we're talking about, you see, inherently, because the fundamentals of the economy are weak, and I'm talking mainly about the structural fundamental. For the macroeconomic fundamental, they can improve from time to time. But even that is still relative. Even where we are, we say inflation is single digit. But where we are with inflation, compared to our trading partners, it's still high.
Very, very high.
So even though you have improved, in relative terms to your trading partners, you haven't improved that much. So that will still affect your exchange rate somehow. But, less, so. But as for the structural fundamentals, the fact that we have not been able to diversify our exports and add value, to our main exports. And we also heavily depend on imports of virtually everything. Those are the structural fundamentals that we need to transform this economy, over the long term.
Okay.
To support.
Okay.
To support.
Let me read a few comments and then take Nii Moi's comments. I'm Louis from Ablekuma. Bernard, halting the city from falling needs a 360-degree overhaul, but we must implement measures even if it's long term. Ralph from Amprobi says, Bernard, USA has one of the largest trade deficits because they import at a higher rate, but they still have one of the most stable currencies. So why do we attribute the depreciation of the city to imports? Ralph wants to know. Martin says, when NDC was in power, Dr. Bawumia came out with many lectures on how to handle the cedi dollar and other economic issues. Now that he's in power and can't implement them, we talk too much in Ghana. We have issue with implementation. Komlak Gidi says, Bernard, the Ghana cedi is falling just because we import more than we export. The Ghana cedi can only survive the test of time if we learn to consume more made in Ghana products. Mr. Asante Afenya, New Jerusalem. Good evening, Bernard. Can you ask Dr. Nii Moi Thompson why won't Ghana adopt the US dollar as its national currency?
Yeah.
Good evening. If the analysis your guests demonstrate are just similar to what our finance minister and leaders are studying, then we don't have a problem. But the sad thing is that they don't, and if they do, why are we here? All right, Doc, what are your... You suggested in an article that, this is Dr. Nii Moi Thompson, that we should have a Senchi-type meeting again?
Yes.
Seriously?
Yes, because of the nature of it. Because economic development is about more than economics. It's also political, it's institutional. Our political system as it is now is highly adversarial, even confrontational, and also exclusionary. So you have a situation, and in that article I compared ourselves to what happens in Germany, for example, where they have what they call grand coalition, and it's what helped them to have the dominant economy that they have in Germany today. It's not just one party that dominates at any moment and excludes everyone else. They have coalitions of the two major ones and the smaller ones. So at any given moment, Germans from different political parties are contributing to national development. In our case, one political party comes to power and everybody else is frozen out, despite the fact that other political parties may have that kind of thing. In the absence of reforms in that political structure, we may want to resort to these kinds of occasional forums that will then give the government of the day some flexibility, because there are certain policies that you may want to pursue, but it will be difficult unless you have buy-in beyond your own political party and even electoral mandate. For instance, I insist that we need to have major cutbacks in government spending. That's not something you can easily do, given the fact that the government is so heavily invested in meeting manifesto promises and other. Most of the spending, of course, counterproductive and not really fair. So you need that kind of place to kind of let out some of the pressure and gain some legitimacy on that. Now, lastly, let me just touch on this structural fundamental and macro fundamentals. The two ultimately are related, and we need to come to terms with that. One of the major deficiencies in monetary policy, not just in Ghana and Africa, is that it lacks the micro. It doesn't often reflect what happens in the real sector. We talked about the U.S. earlier. In the U.S., and you can Google this, they have what they call the Beige Book, which looks at economic conditions in certain regions of the U.S. They've already split them up. And so that forms the basis of monetary policy. They look at things like factory delivery times, how long it takes. We don't look at any of those things. Everything is at the high end.
Exactly. We need to bring things down.
So
Dr. Nii Moi Thompson, thank you very much. He's an economist, former DG, NDPC, former consultant, UNDP, also Dr. John Kwakye, former
I wasn't
IMF.
a consultant. I was actually a full-time employee there.
Okay, forgive me. Dr. John Kwakye, member of MPC, private economic consultant, former IEA, former IFS, former IMF,
former Bank of Ghana,
former plenty things. I mean, I'm just Bernard. I'm not former anything. I'm just Bernard Cedi. Thank you for watching. There'll be a replay of this on Tuesday at 2 p.m. Thank you for watching. Good night.
Thank you.
of View is sponsored by Castlegate Estate Company Limited, the nation's #1 service plot specialist.